What's going on, guys? I want to take maybe the next 5 to 10 minutes just to run through a quick video talking about over the last few weeks. We've kind of had this bullish thesis. There's been something different about the market. Things have changed. We're seeing some rates of trends change from the downside. We're starting to see moving averages flat now, or at the very minimum, not just in straight up free fall mode. And we were able to pick up on this a few weeks ago and start to position ourselves into some areas of the market that had sold off, at ridiculous rates here, specifically talking about biotech. That's what we're going to focus on over the next 5 to 10 minutes.
Could have been on Wall Street. Should have been on a ball team. Could give a fuck about y'all team, cause I don't really feel none of y'all. Morphine, Wall Street.
Realistically, this video is just going to kind of go through the overall process of how we were able to key in on XBI, which is the ETF that we're using for biotech exposure. Dive into the Coifin side of it really quick, look at some of the individual names. There are some names that we are currently in as a group, some names that you guys are in currently as individual traders. So props to you guys for doing that stuff. But for the rest of you guys that maybe don't understand exactly how we were able to do it, for newer guys that are watching this in the future, I'm going to give you a complete rundown over the next 10 minutes of exactly how we were able to do that. And it all started with Coifin, right? So we look at this every single day, damn near. Well, I do at least every single day, multiple times a day. And as a group, we look at this 3 times a week for sure. And if you're trading live with us, you see it probably every single day that the market is open. So it starts off with, we're just going to focus in on this U.S. Industries tab, and we try to keep the macro time frame as our base, right? So year to date is generally where we operate, and we want to get a general idea of what is the market doing, where is it rewarding risk, where is it punishing risk, etc. And as you can see right off the bat, there is no XBI here. It's IBB. And so really quick, we had to go through and figure out, first off, what is IBB? Okay, it's biotech, but is IBB realistically the best ticker to be using for the actual analysis portion? We get the idea that biotech right now is showing a relative uptrend. We actually went through, and what we did with Coifin is we typed in IBB. If you're on the paid version of Coifin, you could do this as well. If not, this is one thing you're missing out on. So right, snapshots, you can go down to holdings. You get a general idea of, hey, where is this weighted? Right now, you can tell right off the bat that this is not equally weighted. You have VRTX up here at 7.39% of the overall ETF, AMGN 7.31, and then as it goes down, you can see it reduces. So there are some overweight names within IBB. What's the difference between IBB and XBI? The actual exposure is relatively the same in regards to which companies are within both ETFs. But the first thing you notice right here is the weight, right? There's no huge behemoths. There's no 7%ers, 6%ers, 5%ers. They're all 1%-ish or less. And so realistically, if you're looking for broad-based exposure without any one particular company overweight, XBI was just the better option. Now, like I said, there's a lot of crossover between the two, between XBI and IBB, but if you really want less exposure to a few companies at the top of the ETF, this is just a better idea. And so this is what we use. We decided as a group that we were going to use XBI instead of IBB, but we realistically found this based off of the IBB ETF within this U.S. Industries. And what we noticed on the year to date, this was back in the middle of June, is we were unable to hit a lower low. As you can see here, I'm going to keep the mouse highlighted on this so the line doesn't go away, but I want you to see the previous 2 lower lows here. We were able to hold that low without hitting a lower low, and that was eye-opening for us because we stamped out a low at the beginning of May, and many names came back down and actually broke below that May low, where biotech did not. And a lot of the individual names we held or didn't even get down and retest that May low. We held above it. And within the ETFs themselves, we noticed that biotech was unable to break below those May lows. That was a yellow flag for us. Hey, check this out. What is going on here? And as we dove deeper into the biotech space, we realized that a lot of these names had actually potentially found a floor. So this was how we singled out IBB at the very beginning to go and actually look at it. One other thing I want to point out here is the size versus value factor analysis tab here. We can hide this. We know that a lot of the biotech names are within IWO. If you don't know that, now you do. Spend a couple weeks in our group. You're going to understand that small cap growth, a lot of that is going to be biotech. we see that we have stamped out a May low, and we've been in a consistent uptrend ever since. Important to understand, this is not absolute performance. This is relative performance against the S&P 500. But when we're seeing relative strength in an area of the market that is typically referred to as the riskiest part of the market in regards to equities, showing relative strength is very, very good. And so we've noticed this, and we had noticed this prior to noticing Biotech, that IWO stamped at a low at the beginning of May, and we have been in an uptrend since then. IBB, a large majority of those names are within IWO. So there's two pieces of the puzzle. You have relative strength coming in through small cap growth, and we have IBB, or biotech in general, holding those May lows and not hitting a lower low, whereas so many other areas of the market did. We chose XBI, so we're going to move over to TradingView and actually look at XBI and visualize what we were talking about. So if you were in the group, I don't know when you're going to be watching this, but when you're in the group, you remember the three tickers that we were looking at, right? ARK, IPO, and XBB. Really quick to show you guys what we were looking at here. You can see that we have relatively the same chart pattern across all three of these ETFs. ARK held those May lows. This is a very risky part of the market that obviously has been sold off like crazy after peaking for whatever reason. It's not up for us to figure out why, just it is up for us to observe it and understand what it could potentially mean now. If the riskier parts of the market that have sold off like crazy were unable to break those May lows when the entire market was hitting new lows, that is a yellow flag to go figure out, hey, what is going on here? Is this something we should potentially be looking to go long eventually? And so ARK was one of the first pieces of the puzzle, right? Unable to stamp that out, one of the riskier parts of the market. What about IPO? IPO, same sort of idea, right? We stamped out those May lows, unable to break those May lows, and we've been consolidating since. That is relative strength in a market that is continuing to hit lower lows, and these riskier areas are not. Go back to XBI, Same price action. We held the May lows. The difference between XBI, ARK, and IPO is that we got a huge rebound on high volume off of these lows here. You can see that the volume bar relative strength was through the roof at around 2, maybe even a little bit more than 2x. That is a green flag for us. All of a sudden, we are actively looking at going long. It's no more, hey, is this something that we should be monitoring over the next 2-3 weeks? No, now it's, hey, something is going on here. Let's start looking at names to buy. And that's when we deep dive the actual ETF. So this was the area that we started focusing on XBI to potentially go long. We saw that it held the lows. We saw the big thrust, the volume thrust. We talked about it in Discord as a group during our strategy sessions. So let's go back and actually dive into XBI really quick. Now, obviously, this is hindsight, but you can go through Discord and look at the historical conversations over the last month. We have some crazy runners in here. Beam is up 79%, Fate's up 53%, GBT, TW, STIOVA, NTLA, ARWR, etc. Now, we did not trade all of these. We traded a handful of these, which is fine, and some of the guys are still in those. But this is the type of returns that we would have expected off of a huge volume thrust in an area of the market that traditionally is very risk on, and bounced off of those lows, unable to hit lower lows. We set the stage. We knew that this was an area that we needed to be long in. We set built the puzzle piece from all these different areas, and here we are about 3 or 4 weeks after we started buying these names, and they're not only outperforming the market, but they're outperforming, our expectations. At no point did I think that Beam was going to be up nearly 80% over the last month. CRSP, which is a very popular name, up 18%, etc. Right? So you can actually go back and filter these three returns and look. AGEN is up 81.53, right? SRNE, this is a popular name. It was traded like crazy in 2020 and 2021, up damn near 60%. Anyway, so this was how we were able to go in and figure out why XBI. Why are we buying Biotech? What is it? Was it just a complete gamble? No, there's a thought process behind it. It all starts with relative strength. Where are we? And then once we figure out the relative strength against the S&P 500, flip over to TradingView, and on an absolute price point, right? Because just because there's relative strength against the S&P 500 does not necessarily mean it's a buying opportunity. It just means, hey, there's strength here. Let's figure out if there is an opportunity. It just so happens that there was. We held the lows, saw the thrust move. We were able to scoop some of these up. Now, current play here for the guys that are still in, some of these trades are performing beautifully. You don't really have too much to worry about. You can see our Beam play. There is one person in our group that is still holding this Beam play. We have a VIR. We have a guy in our group that is still holding the VIR play, took profits off on this candle with the potential blown off the top. Looks like we're setting somewhat of a bull flag up here underneath a resistance area at around $30. So this looks fantastic. We have a trader that's in TWST that was able to buy during this pullback. We're now consolidating above a risk on level. That's still looking good. Anyway, there's lots of different names here, and I'm in XBI. There's a few guys that are in XBI itself. We're showing somewhat of a consolidation phase. I had a bull pennant going for a little while, but obviously this has been invalidated. If you know anything about our group, I do not delete anything, so I can look back and say, why did this not play out, etc. But we're consolidating right below a risk on level at 84. And we had issued a new buy as a group area above 84. So if we get a close above 84 on some serious R-vol, there's an opportunity to continue to get long XBI. But this was a great play. We are in a bear market right now. Everybody is in the mindset of sell the rips, sell the rips, sell the rips. And for the most part, we have been too over the last 7 months. Other than energy, we've been able to, at the very minimum, stay out of buying some really stupid shit, which is awesome for us. But we saw this as an opportunity to actually go long, buck the trend, be a little bit of a contrarian. We were able to make some smart plays here, some smart buys, and be able to profit while going long in a bear market. Is this the end for XBI? As of right now, I don't think so. We have time on our plays for the guys that are trading options. For the guys that are trading equities, obviously the only thing you have to worry about is opportunity cost. But everything here, for the most part, looks great. A close below somewhere around 78.5 would invalidate this consolidation fractal. Maybe think about getting out then. But right now, we're consolidating below a resistance area at 84 and potentially adding in over the next day or two. So I hope this helps set the stage from step 1 through step 3 of our system, the analysis portion, then finding it on TradingView, and then obviously step 3 is trading the motherfucker, right? So hopefully this helps give you a bird eye view. If you have any questions, feel free, let me know.